CTM, does that sound familiar? Showing up and putting the work in. It's what we do each and every day. It's what pays dividends. It's why we look back and we see how far we come as we continue to head to the summit together. And then as we reach what we believe to be the highest peak on the mountain, we look upon the horizon and we say, we now have the aptitude, we now have the ability, we now have the tools to go even further. And we do it here together. Everyone, I hope you're well and doing great as we get ready for today's session. Today, we are talking about why Bitcoin's 4-year cycle no longer matters. We'll start over here with Bitcoin trading at $93,782. Love the difference between that old reminder between log, which we're focused on all the time, and then linear. I remember back in 2020, when we were preparing everyone for what was going to be the next Bitcoin bull run. And I remember showing them that eventually this over here, this peak is going to look like this one over here. Let me go ahead and just get this over here and get the pointer going. Get excited for today's session. I was trying to show everyone that this peak here is going to look like this in hindsight. Fast forward, and we are beginning to see that occurring right now as we speak. And this giant peak now is beginning to look smaller and smaller. Eventually, this one over here, 55,000 Bitcoin is cheap, is going to be dwarfed in size as we continue the run of the bull. Let's take a look at what's going on over here today. Just looking at the short-term price action, and we see that price, after coming so close to that psychological number, nothing more, $100,000 Bitcoin, we've seen price pull back now roughly about 8%, and it's pulled back right into our area of what was resistance, now looking to confirm as support. Everything right on time. Bitcoin now having the opportunity here to consolidate ahead of Thanksgiving week and December. Lots of people are selling Bitcoin, right? We know Tone Vase is taking a short-term trade. It looks like he's trying to sell $100,000 Bitcoin, looking to pick up sometime around 84,000 corn. Some good awareness. He's picked a good area of support if we were to come down over there. But I'm reminded, and I remember what it was like as we were just fast forward a year earlier. Bitcoin was around $50,000 last February, and a lot of people are like, all right, I'm going to be waiting here. Bitcoin pulls back towards 40,000. I'm going to be in it, and I'm going to be buying Bitcoin quickly and sharply, doing Bitcoin things as it generally does. But this is traditional finance. I want to point something out over here. And look, I sold some Bitcoin around 99,000, and I'll sell some more if it continues to move higher. And here's my reasons why. And he's pointing that there's the drawdowns from the all-time high. It's kind of neat looking at the drawdowns, and obviously during the beginning, during the hype phase, the drawdown was as much as 90% with that volatility. And then as you came into the next cycle, Bitcoin draw down 85%. Now, granted, it did draw down once again, 84%. These two drawdowns are very, very, well, they're almost exact. And then we had the last cycle, Bitcoin drawing down 76%. That's a definite trend in place. We are seeing as Bitcoin matures, as the market cap continues to grow, the volatility on the downside is definitely diminishing. There are people who believe in diminishing returns. Don't forget this cycle, above 270,000 Bitcoin, diminishing returns from cycle high to cycle high is disproven. From the low of the cycle to the high of the cycle is disproven. Bitcoin's diminishing returns is nothing more than a theory that was right on time, I believe, when it was introduced into the psyche of people, but that's not something that will stay consistent. Now, the problem with this, though, and this is a big problem, and you can say, oh, Bitcoin is hitting new all-time highs. I know that it's prone to rather large drawdowns. And someone who's not familiar with Bitcoin, and I don't know much about Ben Carlson, I think he's from traditional finance. And anyway, I don't know anything about him. But what I do know is what a lot of people from traditional finance believe. And when they look at this and they're like, oh, it's, you know what, it's good to take some profit because Bitcoin eventually likely will draw down. Except we'll talk about that as we get forward into this. But right now, I want to focus on the most important part of this chart. And it's not what everyone's looking at. It's not these lasting drawdowns from the all-time high, but it's these periods right over here. It's these periods right over here, not as Bitcoin makes the new all-time high. It's the period when Bitcoin, you know, ever heard the old adage, overbought can remain overbought longer than or markets can remain irrational longer than investors can remain solvent. Oversold can remain oversold. If you're trading oscillars, and this is what someone looking at this is looking at it like, but let me give you some sweet perspective. Let's look at what happened over here. Can you imagine as price reaches this area, as price is reaching this area, you're like, okay, it's time to sell some corn. I'm selling corn because we're getting ready for potentially a big pullback. Let's go ahead and look at where that was. And I'm going to be generous. I'm going to wait until the new all-time high was made over here above 1200. April 2017. You're like, okay, you know, Bitcoin is prone to those large drawdowns. It's making those new all-time highs. I think it's a good time to sell some corn. Could you imagine? This is price here is $1,300. Price then catapulted in just a few months. I mean, this is the time that you want to be invested, in my opinion. In my opinion, and this is only my opinion. I do what I do. I put the work in each and every day. I show up with you, and I share my view, and I help that. What it does is help you form your own. I hope it teaches you, helps you to learn to think critically, and that translates into all other areas of your life. Is this a healthy pullback, Jeff, right now, as we're looking at an 8% pullback in Bitcoin? Generally speaking, a healthy pullback in Bitcoin has been about 30%. Right now, I mean, I think it's about 8%. It's about 8%. I wouldn't really consider it anything more thus far, Jeff, as really just consolidating at its highs over here right now. If we were to have a healthy pullback, and don't forget, prior to this pullback over here from the March 14th high, where we saw a 30% pullback, all pullbacks coming off of the bull market breakout, since the bull market breakout, we were there. We called it in real time. We called it once, and we called it right on time. There were many pullbacks, or there were 3 pullbacks, rather, that were about 22% in nature. You have another one right here, another one right over here, and another one right over here. And they were all roughly 22% in duration. So I think that for this cycle so far, that's a pretty normal pullback, 20%-ish, right? 22%, with 33% being the greatest thus far. And coming into, by the way, what I'm deeming the new, I don't want to say anything. So up until that point on the bull market breakout, we were tracking this trend line, and the invalidation of the breakout, because you don't know, like, all we know is that the bull market is breaking out to the upside. We don't know when that rolls over. So we're just tracking this line over here. I think now that changes, and you can see once, twice into this line over here. There's a good chance on any pullbacks going forward. There's a better than a good chance why the duration of this bull runs that we do not trade below that. That's just an opinion. It's just my opinion, for whatever that's worth over here. So I think that's premature. I think that's early, and I think that's why. And then you can see over here, you're looking at Bitcoin. This is from Check on Chain, extreme oscillators. And you can see that right now, we're not towards a period where Bitcoin is getting extended, becoming extended, when the majority of the gains are put in a short amount of time. So to me, it seems that we're very early in cycle. We are seeing, obviously, a lot of long-term Bitcoin holders. They've sold 128,000 of the corn into this high over here. And that happens look at this. This is into the March high as Bitcoin made the new all-time high and then was running up. And as Bitcoin is running up in every cycle, you see long-term holder distribution. That's actually a sign of a healthy and good Bitcoin market. What's different this time is that during this last unloading of long-term sellers, long-term holders, sell side increasing, you saw 90% of that selling pressure absorbed by the spot ETFs. That's an absolute game changer. That's like oh, the ETFs don't matter. Yeah, the ETFs matter. $30 billion of inflows into Bitcoin matters. And now we have a new participant, a new segment of this whole puzzle. And then you have, obviously, Saylor continually raising money and then bidding Bitcoin. And all these things definitely add up over here. I'm just going to bring in a little bit of awareness that throws people off. I know a lot of people, I really believe, because it's what I'm seeing out there, that a lot of people believe that potentially we're getting close to a cycle top. Hey, it's not as if it's ever easy, and it's not as if there are not warning signs. Are we seeing the yield curve now on inverting, which does signal the potential of a recession? Do I think Bitcoin acts well in a recession? We've covered all these things. That's not for today. Right now, I want to take a look at where we are or where we've been in the past. And a lot of people have that whole awareness that, oh, the cycle peaks right after the halving. We have a better slide, a better chart to show you on that over here. By the way, we are right now for the next 3 days seeing TradingView offer their Black Friday sale, where if you buy the premium, you could save up to 70%. You could basically get the same premium for the same price as the plus level if you go ahead and you purchase that. 30% on essential, 40% off on plus, and 70% off on the premium. Let me jump over here and talk about right over here. Like, this is the halving, or in the past, we'll go back to 2012. Here's the halving cycle peak. Here's the halving cycle peak. Here's the halving cycle peak. Only that wasn't the cycle peak. The cycle peak was over here. So a lot of people get confused and they think that generally the cycle peak comes shortly after the halving. How about this for a different perspective? Look at this chart over here and you go by years. So 2016, and look, like, this is where we are right now, lining it up like this. And then you can see that really the mega bull occurs during 2013. 2016, oh, election year, that's what things, 2017, that is when the bull ran. And we just showed you how it was from April to December, how the majority of that price appreciation occurred. Here we are in 2020, 2021, it's over, but we peaked up towards the end over here. And here we are right now in 2024. I think that a lot of people are going to be surprised on this current cycle. Not that we end up running throughout 2025 and into 2026, but that the high of this cycle is going to come actually, and Bitcoin is changing, Bitcoin is evolving, it's going to come a lot closer to the halving over here in 2028. Every 210,000 blocks now expected for March 2028. And as we look before at the drawdowns, and we saw that each cycle they are decreasing, I expect that we see a significant decrease this current cycle that we're in right now. Of course, there are many catalysts. Let me take a sip of water. Of course, there are many catalysts that could throw a curveball and change everything in an instant. Remember when they locked down the globe in 2020? Who knows what happens this time? World War III? That might be a catalyst that could change things. EMP attack over Europe? That might be something that can change things. A nuclear attack in Europe? That could be something that changed things. Could we see alien invasion? Everything is on the table. Now, I do believe that this current cycle, as we looked at the decreasing of the drawdowns, with obviously the hype cycle having the largest 90%, then 85%, 84%, same thing. And then over here, 76%. I do think that we're looking at and going to see the shortest, or the narrowest drawdown this period. I wish I could put a number on it. There's no way that I could do that. And that also is very dependent on how high, or if we do have any type of, which I don't think that we will, but any type of blow off behavior, right? Because the sharper the blow off, the sharper the vertical acceleration, then the volatility just comes in there. We had over here in such a short period from that 2017 top, in basically weeks, we saw a massive drawdown occur on Bitcoin. It's because of the sharp acceleration. If you just use like mean reversion and you take away that little period of trading, I think price just came back to kind of where it was. So if price does accelerate to the upside at any point in time, then expect a snapback behavior and a sharper drawdown. I don't think we're going to see that at this type of market cap. Bitcoin approaching a $2 trillion market cap. And I think that what we're looking at is just a lot more of those pieces of the puzzle that we talked about. Now the spot ETF. We're looking, of course, at public companies within the US beginning to get really involved. MicroStrategy is a major player that was not involved in the way that it is currently, now owning 2% of the supply, was in the past. And we have, of course, still the potential. Does anyone know what Polymarket is pricing in right now for the US Bitcoin reserve? Now, I think that what they're doing is that within the first 100 days, they're saying whether or not it will become law. I don't know if that timeline matters. I think we're just more curious about whether or not that possibility exists, that the US, who already owns 1% of the ply, would be willing to take on another 1 million Bitcoin, 200,000 a year for 5 years in a row. Not looking to sell that. It says unless it's used for 20 years, unless it's used to pay off any of the federal debt. Now, don't confuse that. They're not saying that they are launching this Bitcoin reserve to pay off the federal debt. It says that the only qualifier that would allow them to sell any Bitcoin within 20 years is if any of that was used to pay off the debt. It's not the purpose of the fund. So I just want to address this because I want us all to be clear. Like data is data, and so the top over here, November 2021, right? And so this is last cycle, and then I'm looking over here and I see the price of Bitcoin in March trading at an all-time high, and that's prior to the halving. So that's last cycle. So I don't, look, I think it's very important to kind of be very clear, and like the top that occurred in Bitcoin occurred over here, and it's from this cycle. The halving's here. It starts over here, and then the next halving is over here. So this is not the top. This was the top. It's pretty neat, right? Pretty neat. 27% chance, not down from 33%, up from 8%. I think you told us last week that it was at 8% chance. So that's interesting. I wonder if the new Treasury Secretary had anything to do with the increased probability. But also that has a lot to do with, of course, whether or not they're talking about actually the first 100 days and whether like the bill needs to be passed in order for that to win and what those probabilities are set off of. I'm just more concerned about whether or not it happens or not. This is interesting, and this is just for fun. And I wonder if this has a lot to do when the ETFs were first launched. It doesn't. This is going back to June 2021. This works also. This is crazy. This works also for equity markets. And if you ever seen looking at the return of the NASDAQ, for example, or S&P 500 for the last 24 years, and then if you look at the return, if you just held overnight, it pretty much mirrors this over here. Fascinating. I have no idea why that occurs. And I have no idea why no one has ever adopted that strategy. Maybe because it doesn't really make sense or add up. I do not know. Bitcoin positioning right here, currently out of the market on the sidelines. Another beautiful exit by Bitcoin at the top over here. Ethereum running sideways. Cardano holding an open position right now, 150% into profit. And Solana is also out on the sidelines. Bitcoin bull runs, suggesting that momentum continues to the upside. Currently holding a position right now that is 44% into profit. Here is a look at that last exit on Bitcoin on 107, out on the sidelines, waiting for any type of upward momentum in order to return back to the field. Last night or yesterday, we saw after the markets closed, we saw some type of sharp downward acceleration on price. Maybe I just lost that last slide I had. Here we go. Anyway, and it was on the announcement that President-elect Trump is going to immediately place 25% tariffs on its largest, on two of its largest trading partners, or at least the Canada and Mexico, who both the United States is their largest trading partner. And this was under the negotiating tool that, listen, if you close the border, if you stop letting illegal immigration pass through the border, then these tariffs will come off. Initially, the reaction was one of, especially from Mexico, of largely emotion. And then shortly thereafter, says that Mexican president says that the migrant caravans are no longer arriving to the U.S. border. I'm from the view that we'll reach agreement with the U.S. We're seeking to meet as soon as possible. And it's beautiful negotiation skill. Same thing with China, 10% tariff announced on Chinese goods, and with the potential caveat that even goods sold under $800 would also soon begin to be receiving tariffs, unless the supply of fentanyl coming into the U.S. originated in China is ceased. So initially, the market reaction was to sell off pretty aggressively and hard, but that might have been a nice trap here for the bulls, as markets have since reversed. There's one thing that has me a little bit concerned, and it's NVIDIA. And we were looking and watching what was happening over here. And first of all, look at that liquidity grab off the top, that sharp reversal. And since then, and since earnings, we had this red trend line over here. It was a one-touch trend line. We took this trend line, we drew this trend line off of these 2 touches, 3 touches, and then you could see that resistance regained the support. Clearly, it's market structure. We cloned the red line off as 1 touch, and then we said if we break down from here, that is a big technical breakdown on NVIDIA. The sell-off yesterday was significant. Price bouncing a little bit since then, but it looks like maybe that's just coming back in for a retest. If NVIDIA is able to resume down, this could get quite ugly over here. So all eyes on NVIDIA, and watch NVIDIA. And we're about to find out how much of the market NVIDIA actually is, because even on today, we're seeing NASDAQ is up, triple Qs are up, tech's up, FANG is up. And I guess NVIDIA, you could say, is bouncing. It remains to be seen whether or not it is something of a liquidity grab to the downside, where NVIDIA is going to pull up, or if we're going to actually see a resumption over here to the downside. So I'm watching that pretty closely. On our stock positioning, we continue to remain on the sidelines on TQQQ, right at off of all-time highs. NVIDIA also on the sidelines at and right on all-time highs. We're looking at FNGU holding a 19% open position, and also Tesla holding 19% open position. The dollar, after the new U.S. Treasury Secretary was announced, immediately sold off and is since backing up and stabilizing. This was an aggressive entry, and I think that this is an aggressive exit, but it still stands. We're watching this sell impulse to see when the first and earliest opportunity of any type of new trend change developing on the dollar. And then we look over here and we're seeing the 10-year. Again, this was also, most people were not looking for this except the great ones. Stanley Druckenmiller, Paul Tudor Jones, both were all over this. It's amazing. They amaze me. But CTM was here. And now we've had yesterday a breakdown outside of our earliest exit. And that's it. And that's our earliest exit. Is this again coming off of news of the U.S. Treasury Secretary? I don't know. We just follow the technicals. I'm not looking for when we would see any upside resumption. It's exit the trade over here for now. We'll watch. My expectation is that at minimum, we come in and test this line over here. Maybe we come and test the breakout of this line over here. And then this would be a confirmation. This would be a confirmation of a conservative breakdown occurring. So you got some pretty strong support right now over there. Ultimately, I would not even be surprised if we came back down towards 4%. It's an upward sloping line. We'll take it as it comes right now. We're just saying, what a fantastic trade. Out on the sidelines, waiting for more. I also would not be surprised for us to refill this breakdown, come in for a retest, and then see if we resume down. Even if we come up and continue to rise over here, I think it's best to be out on the sidelines right now. Let's move back. And by the way, let's go back over here and take a look at what's going on. I wanted to really bring this into the conversation as we talk about right now why the 4-year cycle is evolving. This was a message received yesterday requesting access to CTM bull runs. Look, Jordan, my synopsis below is my way of expressing the gratitude I have from being a member from 4 years now, and why I still struggle at times with changing jobs and family matters, because really it does. Family really matters. I have executed, I love the use of the word executed, right? Because this is everything. And continue to execute as follows and have built over time. Coach, what about the August top wick on the 10-year? Let me snap back over here, take a look at it, and then we'll continue our conversation. So August, wick down over here. Is it possible we come and take out that wick? So I mean, if that were happening, or that's not going to happen, I don't think in the near term. I don't think so. My expectation, and this is coming off of the other two times when the Fed cut and we saw similar price reaction where we saw bonds sell off so aggressively. This is, first of all, the most aggressive it's ever sold off. The prior two lasted to about right over here. And then one of them saw a retrace, and then that reverses. Each of them takes out the local high. And the one that retraced further down, it just barely took out the local high. So outside of some type of, like if at any point in time, there's any type of necessity for the Fed to come in and begin buying short-term yield, I can't imagine, Ace. I don't see that happening right now or unfolding. Of course, it's the markets. It's possible, but this would be a major breakdown, taking out this line over here. And if we do take out this line, when we eventually next time take out this line over here, I don't think that will stop at the August low, in my opinion. And I think that likely, as Ben Cowan would put it, at that point, we're coming home. Coming home is that big line of what was resistance, now support over here. So that's my view of it. If we clone a line, how does it look? Which line? So I don't have a line off of the touch or the wick down. Let me come to the daily time frame. Let's take a look at it. And the reason I don't have a wick off of here, and of course it's structure, so it's going to line up. but it's because the market was paying attention right over here and then right over here. If I go ahead and clone that line off of the wick low, I think what we're going to see is it also, it doesn't really line up too well. I thought it was going to come in right over here. Yeah. So I'm going to view that like that line seems more appropriate to me in first the resistance, then support. But I've seen it a gazillion times and we'll see it a gazillion more. There you go, Ace. You have over here that wick down over here, and then this is where price gapped up to. I mean, it's in play. It could be in play in the further. Whether or not you agree with the look that I just gave, I hope that it was of use either into kind of solidify them what you're seeing more, and if it's there and if it's something strong, let's continue playing and poking at it either now or at another time. But yeah, I'm trading with a little bit of bias here. I'm very good with trading with bias, meaning I'm aware of it. But my expectations, and we were looking for, again, a lot of people after the election. Oh, sorry about that. After like we were early or on time. That's where we want to be. And then after the election, there was this big and sharp move. Or the election was over here, November 6th, right over here. So the election's here, and then the reaction, and I was getting a lot of notes at this point, and people were starting to get concerned about like the long-term ramifications, and they were going to see. And I was like, no, I think we're getting ready for a turn. And then sure enough, just a week later or so, we had that big breakdown. Ace, remember you had us put in this earliest opportunity for a breakdown. That's now in play. And there we are. Let's go back over here and take a look at what's going on. So this is what I've built over time. So the cold storage hodl. So on exchange, I dollar cost average monthly. And I use CTM V2 1 day as risk on, risk off for ongoing accumulation. So what he's talking about over here, I'd be very interested. And again, I was talking about yesterday. This is when you first log into the dashboard, the first thing you're seeing is CTM 2.0. So I need to kind of give some context over there. He's pointing then to CTMX. This is finalized August 2023, built on top of CTM 2.0. He's using the daily over here on Bitcoin, which again, I think it's really nice. What are you talking about? He's using this as for example, like this. And please, I didn't include the name because I don't think it's right to include someone's name like that. I wouldn't do that. But please, if you're executing a different way than I'm now describing, please let me know. And I believe that the way that the daily here is used for dollar cost averaging is, or the way that I have proposed, is that when you're seeing out of the market in the gray areas, your dollar cost averaging, in his case monthly, into a cash account. So your dollar cost averaging, your dollar cost averaging, your full position in, out of the market, dollar cost averaging, dollar cost averaging, dollar cost averaging, dollar cost averaging, in the market, out, dollar cost average, until you get into these trades that hold and run. And even when you're in these trades, you're still dollar cost averaging on a monthly basis, but not right into Bitcoin. You're into that cash account waiting for the next trade to happen. Now, on the daily, it's not as if the performance is bad. And specifically, it's very good for the last, since 2020. When you look at, well, Bitcoin since 2020, buy and hold is up. Does anyone know? It should be like 1,000%, right? If you bought Bitcoin January 1st, 2020, and you look at this and you're like, all right, instead of a 76% drawdown, a 60% drawdown, I have a 14% drawdown and I'm up 2,800%. Really good dollar cost averaging strategy. However, he is saying I'm looking to add or would like to be doing this now on the Bitcoin bull runs. And I think this is obviously something that is vastly superior. And this was obviously recently when I say recently, sometime in the, I don't know, at the beginning of this year, sometime around this area over here, Bitcoin 50K was introduced because people are like, as we looked at yesterday, look, buy and hold outperforms if you know when the exact low is and if you know when the exact high. So what we do is build Bitcoin bull runs in order to have longer holding periods. And yeah, I think this is an even a more advanced model than the daily on X. And I think that it's appropriate here to be not taking that same strategy and dollar cost averaging when out of the market and then using this, which outperforms and has longer holding periods. So you get the favorable tax gains when price allows you to hold that long. My only, I don't know. I'd be it gets more complicated, I think. But when you're in a trade, because these trades could last so long, do you dollar cost average every monthly or weekly buying Bitcoin when in a trade or into a cash account waiting for the next signal to get into it? I'd be interested in hearing people's thoughts and opinions on that. So real estate rentals sold one in 2020, one in 2023, one in 2024. All of that has gone into the corn. Holding, considering RORO, I'm not sure what that is. Post the 2000 peak using either CTM version on the daily. Again, Bitcoin bull markets is superior. And again, caution about looking for that peak this cycle coming up. We'll talk a little bit more about that in 1 second. 2 years of bonuses from work, trading using Bitcoin buy side only 101. So that's on the 8-hour, right? He's trading on CTMX, buy side only on the 8-hour, and BTC 101 for those that are just trading on the buy side alone. This template over here is the way to go. No question about that. Now, with the one caveat, we do have soon enough the new V3 launch is coming up. Again, CTM 2.0, March 2022. July 2023, finalized by August, we had V2, CTMX V2. V3 is over a year in the works, and we just have such solid solutions in place that we're never in a rush to make changes. By the way, here is how they've been navigating in real time. The same Cardano position, 149% into profit. The major difference here is that capture on Solana that V2 missed. And you could see even Ethereum out of the market currently. Let's keep going over here. He says also 1 year of bonuses from work, now trading BTC 107 and 108. So this is beautiful too. If you look over here and you go to both sides on the 8, what I love here, and CTM is many things to many people, but the diversification between strategies is absolutely beautiful. Here he's using on the 8-hour, which trades both the buy and sell side, both BTC 108, 107, I should say, and also 108. Now, 108's profit, we're going back over here. Let me show you. This is 2014. Less than a 20% drawdown, getting close now to $2 million net profit. BTC 107 from the same period is going to have, survey says, only a 1 million % return and a minor less drawdown, 2% less drawdown. Now, one of the major differences between the two is the stop loss. The stop loss here on the long side on BTC 107 is 2.65%. The stop loss, even though the returns are significantly greater, the drawdown is pretty much in line. The stop loss is 13%. Now, it shouldn't matter in so much as if you look at what the average stop loss is, with that 13% stop loss, the average losing trade is a stop loss of less than 2%. Now, the largest is under the 13, but it's 10%. I personally prefer the tighter stop loss. I personally applaud the diversification in trading both the BTC 107, the 108, and then using buy side only 101. Absolutely beautiful stuff. In addition, NVIDIA, Tesla, MicroStrategy shares like 401ks in the UK. I'm now looking to transfer some of my Bitcoin X buy side 101 to the CTM bull runs. So he's looking, I think it's a fantastic template, the buy side 101. I'm not so sure about the daily. The daily in the last 4 years has performed magnificently, but let me just show you the difference here. Let's come back to the top of the last bull market, right? They're both buy side only. So you're looking at a return of 7,400%, 14% drawdown. However, on 101, buy side only, let's go back to that same place over there. Let's look at what we're looking at from the top of the previous bull market. And I mean, is that really a difference? Does it really matter? You do have 44 trades, right? Versus 219 trades. So CTM problems. Look, it's not about what has the highest return. And it's what's most conducive to your quality of life. For a lot of people, most people execute manually, and being able to trade off the daily once a day is a huge, huge thing. Again, that's a tough one, and I respect the decisions in what you choose. Having CTM family to support my long-term objectives, hopes, and dreams is making a priceless difference to me and my family. Keep up the great work. Thank you. Thanks be to God. I consider this to be absolute providence, but what a beautiful thing to hear. If I could say one thing, coming from someone who's been with CTM now for over 4 years, trust your spidey senses, Jordan, especially after 55K Muddy Waters. Meet Kevin. I don't know what this one is, this reference to Meet Kevin is. Could you please follow up and let me know? I don't know which that one is. November 2021, 4-year cycle broken. I listened closely to the adoption of a new technology session, and it also seems like a corridor of political power that the US and Trump has led the G7 along to counter BRICS. A very interesting insight, something I've not thought of. Poland heard the Bitcoin is hope message, but they were outside the corridor looking in. The stage for the battle of Helm's Deep is only beginning to be set. As the G7 are not unified by this technology, the financiers of wars making the most by funding both sides, and as this may be their last window to fund war solely with the money printer, Powell can't be sacked, then your later top thesis closer to the next halving makes sense. Especially as it runs counter to the pre-2024 halving all-time high in the early mid-cycle top and distribution likely before this year ends. After that, institutions' dollar cost averaging will extend the window, grinding up slowly to the top, expanding treasury accumulation and providing the platform for G7 strategic reserve to be agreed, assuming they follow the positive U.S. Strategic Bitcoin reserve decision. In short, look, this is amazing because I'm taking a look at what the charts are showing me and taking a look at, like here's the top. The top is right prior to the all-time high. That's different. Obviously, the drawdown was lower here. The nature of the cycle is changing. But don't forget, and I put this out over here. We were looking at this over here. I just picked this back up recently and right on time. Now I did put where the ultimate market opportunity was based off the upcoming halving. But what I'm seeing happen on the stage with the Bitcoin spot ETFs, with the $30 billion bid into them, with U.S. public companies taking Bitcoin and putting it onto their balance sheets, with people raising money in the debt markets, buying Bitcoin with it, with talks of now the largest nation state in the world by GDP looking to go ahead and add to their Bitcoin position by taking another $1 million corn position. 1 million Bitcoin addition is enormous. This is beautiful. Diminishing returns is not real in an S curve. And again, that's going to be disproven in so much as that from the cycle top to the cycle top, we saw not a 290% gain. We saw, where was the all-time high? Let's do it like this. Right? Diminishing returns. So you have the cycle top the cycle did not top here in November. The cycle topped prior to the halving over here. 268% gain. If we saw from the cycle top a 268% gain, that puts us at $270,000 Bitcoin, right? So from a cycle top to cycle top, if price before 2028 trades above 270,000 Bitcoin, diminishing returns would be disproven. What about from a cycle low to the cycle top? That's a big one. That's 2,230% gain. What will we need to do to be able to beat that, right? Because how are you saying diminishing returns? Are you doing it from the cycle top to top, which I believe is the correct way to do it, but not everyone. Some people might believe that it's better to do it from the low to the high, right? We would need something massive like $365,000 Bitcoin. And what about one more? What about from the halving? From the halving over here to the cycle top, so a 750% gain. So as you look at the set from the halving, you would need to see a monster of a move. So I think after this cycle, that I don't think, it's not my expectations, but I don't have expectations as far as what the price will be. But if, at the end of the day, people will probably and likely be able to say diminishing returns exists unless Bitcoin has what some deem to be, there are people who do have what are realistic price targets that take all of this out. From a cycle top to cycle top, though, I think there's a significant probability that diminishing returns is disproven. I think this is a narrative. I don't think that's true. That the 4-year cycle was coded into the halving programming. It's more important than price. I mean, the new all-time high was not made after the halving, right? In the past, the halving has had such a significant effect on the supply because the miners were the ones mining the extra Bitcoin and then putting it out onto the market. In today's market, the miners' production for the next 4 years is absorbed very quickly. It is not having the same effect that it used to have. And you could see the effect once the supply was cut in half. In each previous cycle, it's caused price to reach a new all-time high. Except this time, before the supply was cut in half, price reached the new all-time high. Clearly, you could see the diminishing effect of the halving on the market. It's there. I mean, it's very real. And some old narratives that we used to lean into, well, Bitcoin's evolving. So we need to evolve our understanding. There's nothing wrong with that. Like, change is good. Change is great. We want to continue to progress forward. And things that are like, look, when Satoshi dropped the white paper, that was what was most relevant. But today, Bitcoin has changed, Bitcoin has progressed, Bitcoin has grown, and things are different. And you got to be able to flow with it. One of the most important things is that Bitcoin is now entering the early majority on an S-curve, the adoption that's taking place over here. Now, it's about the amount of funds that are coming into Bitcoin. It's not about the number of people worldwide who own Bitcoin. Retail does not even matter anymore whatsoever. Well, retail's not here yet. There was a Spaces this morning with 6,000 people on meme coins. Yeah, retail is here. They are speculating, except the cycle is changing. By the way, if we do see something like Bitcoin peak closer to 2028 halving, and if we see drawdowns diminished, but we still see a 40% drawdown, could you imagine what that would do to alts? What does a 40% drawdown do to alts? I mean, things are changing. You have to involve with them. But coming on to this over here, I just want to talk about the ultimate market opportunity and just show you, for those that haven't seen it, it's not Bitcoin. It's all assets that undergo S-curve adoption. Here you could see into the dot-com bubble, Amazon's hype cycle, and then the bubble burst. Massive drawdown on Amazon. What is the extent of that? The drawdown on Amazon saw a 94% drawdown, 95% drawdown. And then Amazon was able to enter into the facing reality stage, right? What is the internet? Is it real? Or is Amazon going to be able to become profitable, right? Forever it was running in a deficit. And then the cloud computing came, and then Amazon AWS, and then Amazon enters the ultimate market opportunity. And you could see that it's not the 4-year cycle, it's an S-curve. You could see the 4-year cycle behavior occurring on Amazon. It's not 4-year cycle. And the 4-year cycle, the reduction of the miner's halving award early on, when the miner reward was significantly greater and the market cap was significantly lower, had enormous ramifications on Bitcoin. It doesn't today. But even when Amazon enters the ultimate market opportunity, there's still plenty of drawdowns. And those drawdowns happen to be about 30% instead of the past drawdowns. Here's 30% drawdowns. There's 30% drawdowns. Here's 30% drawdowns. And then in the past, they had been greater. Amazon having a 60% drawdown. Amazon having a 50% drawdown, and then a 56% drawdown before making new all-time high during facing reality. Ultimate market opportunity, drawdowns are diminishing, and then not over. Here's very recently, Amazon with another 52%. So don't even get comfortable with Bitcoin going forward. Anything could happen at any time. Everyone, have a beautiful day. Thanks for being here for this session. If you are here right now and if you stayed to the end, CTM strong, could you go ahead on your way out and smash the like button over here today? Really, really appreciate that. If you're on the replay crew, watching this on the replay, big shout out to you. Have a beautiful day. God bless you, everyone. Thanks for being here. Please light up the thumbs up, add a comment. Everyone, I'll see you all tomorrow.